I have some really good news and some really bad news. The bad news is that there is a looming crisis around the corner. The good news is that you can actually profit from that crisis. But before we do that, we have to take a look at what's happening with oil prices. Now, if you take a look at the oil prices, they've been really fluctuating throughout the last year, and they are still stable at around $70 to $80, as you can see. We have the WTI, which is WTI West Texas Intermediate, and also Brent. This is the benchmark for the US, and this is the benchmark for the rest of the world. And as you can see that they're actually growing pretty much side by side, and there is a chance for these prices to actually skyrocket to the roof, and that will have some serious consequences not just on the global economy but the US economy. But the good news is that there is a real way for you to profit from that, and there are people right now on Wall Street who are actually looking at this crisis and preparing themselves to profit and make billions of dollars out of it. I mean, they make billions of dollars out of every single crisis that's out there, and I'm going to explain to you how maybe you can also do that. Now, by the way, this is not financial advice. Now, in order to understand what is happening and how you can do that, we have to understand how oil prices work in the first place. You see, there are different types of businesses and different types of commodities. Some businesses and some commodities are easy to sell. But when it comes to oil, it's not really as easy as you might actually think. I know some people have this imagination that you can literally just drill the oil out of the ground and sell it, but that's not how it works. First of all, in order for you to sell the oil, you have to find a place in order to drill it. And when you do that, you have to spend billions of dollars to extract it from the ground. Now, once you do that, then you have to have shipping logistics out there for you to actually ship it and store it somewhere safe. And that requires billions of dollars, and that's why it's not really easy to actually get into the oil business. Usually these are the companies that have been started probably like a century ago when it comes to US oil companies, or in some cases, like for example in Middle East and the rest of the world, usually it's a government-backed corporations that are extracting oil. Now, when you're done with extracting it and getting it to the storage place, what you have to do next is that you have to refine it. When you extract the oil from the ground, you can't easily just sell it out. You have to kind of turn it into a gasoline that can fuel your car, that can fuel the planes, that can fuel the trucks out there, and that takes another billions of dollars of investments. When you do that, then you have to get it to the storage places again, and after that you need to have an entire logistical system for you to actually deliver it to every gas station in the country. And I'm not even talking you taking that oil and exporting it to other countries. Because if you do something like that, then you need to have a much bigger logistical system for you to take it, for example, to Europe, to China, and to the rest of the world. And that's why by the time you extract the oil and the time you actually sell it to your client, a lot of things could happen because it might actually be months. And that's why in order to protect the seller in this case, what the sellers usually do is that they will sign a contract, which we call a forward contract, that you as a buyer is going to buy my oil 2 months from now, for example, an X amount of price. And that's why I'm very comfortable to actually extract that oil from the ground and go through the entire process of refining it and then delivering it to you to the other side of the country, or maybe to the other side of the world. And that's why we have future contracts and we have forward contracts. Now, future contracts, which are also known as futures that you might actually have heard about, are basically the exact same thing as forward contracts, but slightly different. The future contracts are often used in order to speculate in the market. Now, you see, the interesting thing about it is that there are people who are actually doing the real business and are actually making money. And it's understandable because they are spending billions of dollars to extract all of that oil from the ground. But on the other side, we have people who are literally sitting behind computers on Wall Street. They're not extracting oil. They're not doing anything like that. All that they're doing is that they're creating the future contracts and speculating on the price of the oil, where the price of oil is going to be a month from now, 2 weeks from now, 3 months from now. And by speculating on those prices, they're making a lot of money. So for example, they can create a contract Hypothetical example, oil prices today are $50. So they will create a future contract which is $50. A month from now or 2 weeks from now, there is a crisis and oil prices are going to rise to $70. Now I can sell my contract where you can actually buy the oil for $50. But because oil prices right now are $70 since the circumstances in the market has changed, I can sell that contract not for $50 but for $60. Now this is just a hypothetical example. This is how Wall Street often speculates on the price of the oil. And that's why if you kind of take a look at what's happening to the world right now, you realize that the world is in disaster. The world is in a crisis. Now when this crisis started, I wasn't really expecting that this is going to get this bad, but if you kind of watch the news, you will realize that, for example, Iran fires at least 180 missiles into Israel. Israel invaded Lebanon. Israel hits Beirut as world awaits its response against Iran. Now, this is not a political channel. I don't really talk about political issues. I will leave that for you guys to do in the comment section. What I am interested in this video is that I'm going to take a look at it from the financial side of it, and I'm going to talk about it, how investors, speculators are taking advantage out of it and are making a lot of money out of it. That's what I'm interested about. Yes, some people might accuse me that you're actually trying to profit from a war, but if you kind of I don't want to sound like an evil person, but if you kind of look at the history of the world, it always works like that. A crisis on one side of the world is an opportunity for people to make on the other side of the world. Now, whether I talk about it or I don't talk about it, Wall Street, regardless, are going to make money no matter whether I release this video or not. And that's why it's very interesting to talk about and understand how it works and how investors are making billions of dollars out of it. Now, the important thing to understand out of it is that if you take a look at the map of Middle East that I have right in front of you, this is one of the most important, if not the most important area when it comes to oil. And the reason for that is that over 55% of the entire oil in the world is located right here in Middle East. We are talking about Saudi Arabia, Iran, Iraq, Kuwait, United Arab Emirates, Yemen, Oman, and so on and so forth. Most of the oil in the world is located right there. And most of the oil that is supplied to the world is also produced right there. Now, the problem with all of this is that, for example, the oil that comes out from Iraq, Kuwait, and Bahrain, Saudi Arabia, flows through the Persian Gulf and then goes through the Strait of Hormuz. And the problem with that is that there is a very tiny strait right here that is probably around 25 or maybe 30 up to 50 miles. I'm not really exactly sure, but it's less than 50 miles. And it's very easy for a country like Iran to, for example, block it as a leverage in order to use it against the world if something like that happens, if a crisis between these two countries happens. So we have, for example, on one side Israel and then we have an Iran. So if anything like that between these two countries happens, Iran can actually block the Strait of Hormuz in order to put pressure on the United States for it to stop supporting Israel, for example. And that's why this is extremely important, and that's why it can actually send the oil prices to the roof. And a third of LNG that flows mainly from a country like Qatar, that you can see right here, is also flows through the Strait of Hormuz, which means that it's not just oil prices that are going to shoot to the roof, but gas prices as well. And if energy prices across the globe are going to shoot to the roof, what do you think that means for the world? Well, you can do the conclusions for yourself. And when 25% of all the oil that is supplied to the world flows through here, what happens when we have demand stays the same and there is a shortage of 25% of supply to the market of oil? What do you think that is going to do to oil prices? They can easily grow by 50, 60, 70, or probably even double. And that is just part of the problem. The second part of the problem is this side, which we call the Red Sea. You see, when the oil actually leaves, for example, those countries and they go through the Strait of Hormuz, for example, if that oil is going to India or somewhere around here to China, then it's not a big problem. But if that oil or gas flows through the Strait of Hormuz and it goes through the Red Sea, then what do we have over here? in order for it to reach, for example, places like Europe, and then it goes through this part of the world to the United States, it must go through the Red Sea. And a country like Iran has very huge influence over this country, which means that they can also block this part of the world in order to stop the ships flowing into the Red Sea. And if the United States And if those ships that are flowing to the United States do not use the Red Sea, for example, they have to take a very long route through the entire Africa to reach the United States, or take the entire road through the entire Africa to reach Europe. That means that higher cost for transportation, because now you have to waste more energy on transportation since the road is much longer. The second problem is that it is going to make it much more longer for these ships to actually arrive to their destination, and that's so much leverage Iran has in that part of the region. And when it all started, I wasn't really expecting for it to get this bad, but with every single day that I'm watching the news and it's happening, I'm not trying not to watch all those news, but because I'm in the market and I have to understand what is happening, and those things have massive influence over it, I must watch some of those news in order to understand what is happening. Now again, I'm not picking sides, I'm not telling who is right and who is wrong. That's a completely different question. But the crisis is escalating so fast that most of that escalation actually happened in the last 2 weeks or so. So if it actually turns into a major war between these two countries, I don't really know how high oil prices could actually rise. I think from the other side, Wall Street is pretty happy because they will be able to speculate on oil prices and make a lot of money, probably billions of dollars. Now, the question that we want to answer here is that how is that going to impact the United States? That is what we are interested, because we want to know how that will have, what kind of influence that is going to have on the United States. United States is the largest economy. Most of the speculations happens in the United States. Wall Street is in the United States, and United States is one of the largest consumers of oil. So anything that's going to happen to the United States will have massive influence over the entire world and the markets overall. So the great news is that United States is energy sufficient, because United States the United States exports more oil than it imports, which means that if any crisis happens across the globe, it's not like the United States will be left out without oil. United States learned its lesson from back 1970s or 80s, something like that, and it started becoming an energy exporter. So if you take a look at the United States, it exports a lot of oil. And most of the oil that comes to the United States, it is not really coming from the Middle East. It's not coming from countries like Saudi Arabia, Iraq, or other countries. Most of the oil that the United States imports, it imports from a country like Canada. I know that some people might not be expecting this, but Canada is the largest supplier of oil to the United States. Why the United States is actually importing oil from Canada? Why does 50% of imports to the United States are coming from Canada? And in order to understand and answer that question, you have to understand how oil works in the first place. As we have discussed, that it's not just about you just getting out there and extracting, for example, oil from offshores or even from the ground. It's about taking that oil, refining that oil, and then distributing that oil, for example, to the rest of the country. And if you take a look at the map of the United States, Texas is the largest producer of oil in the United States. But on the other side, Canada is also a pretty large producer of oil. So what happens is that in order for Texas to deliver its oil to places like, for example, let's say New York or Boston, it needs to build that entire logistical system through it. But they're much closer to a place like Canada. So it might not be financially beneficial for companies in order to build that entire logistics. And it might be much more cost effective, for example, for Canada to supply the northern side of the United States with oil than, for example, for a place like Texas. And that's why Texas sells a lot of its oil to Mexico. So it's not about which country is what. It's all about money. It's all about making it cost effective. And relying on Canada, of course, is much more reliable for the United States than on a place like Middle East, where the last, 100 years there has been a lot of crises. But that leads us to ask ourselves a different question. Well, if the United States is self-sufficient when it comes to oil, why should we care about the crisis that is happening in Middle East? Well, let's say that the Strait of Hormuz is going to be closed. Let's say, for the sake of example, that there is going to be a shortage of oil in that part of the world. Why that should concern someone in the United States? Now, that is a very fair question to ask yourself, right? What you need to understand about the market is that it's not about one country producing versus the other country. We don't live in that kind of the world. We live in a capitalistic economy where corporations are actually leading the world. And those corporations don't really care about you. They want to do is that they want to maximize their profits. That's all what they care about. They don't care about you. They don't care about those crises that are happening out there. All they want is that maximize the profit, pay their shareholders, improve their balance sheets, improve their valuations. That's what they care about. It's not about you. So if there is a shortage, for example, of oil in the market, do you think those companies care? No, they can make a very valid argument that there is a shortage of oil in the market and they can just easily increase their oil prices, and that's pretty much about it. And that's why, even though that there might not be such a serious crisis of real shortages for oil in the market, it very well might actually lead to the fact that oil prices will actually increase in the United States substantially. And the second thing that you have to understand is that, as we have discussed earlier, is that futures play an important role when it comes to oil prices. And what do you think those people want? Those speculators, they want to profit from the crisis that is happening out there. And that's why the demand for those futures at a lower price will significantly increase, which will lead to the price of oil generally to rise. And that's why no matter what happens, if that crisis right there, right now, escalates to a whole different level, which is exactly what is happening based on the news that have been watching the last 2 weeks, you will clearly see that oil prices will certainly actually rise. Now, it might not actually happen and they will actually find a diplomatic solution and somehow they will actually find a common language between themselves and nothing like that, nothing like a shortage of oil will happen to the market. I hope that's something that will happen, but that's unclear as of the time I'm recording this video. The problem with all of that is that oil is not really a simple commodity like any other commodity out there. You see, when you take a look at the global economy, you realize that things are not produced in one country. If you right now go to your Walmart, you realize that there isn't a single thing that is fully produced in the United States. It's always like, for example, it's a clothes, maybe it's a Spanish company that has factories in China and they bring the materials from 3 different other countries like Mexico, Vietnam, and I don't know, maybe Malaysia, and then they produce or manufacture it in China and then ship it with a Greek company to Europe and then distribute it from there to the rest of the world. I don't know, that could be an entire logistical system, which means that there is a lot of moving, there's a lot of logistics. And that means that if the prices of oil actually increase, that will lead to overall increase in prices in everything, because now flying things to other countries will become more expensive. The cost of actually shipping it between the countries will become more expensive. The truck that will take it from the shipyard and will actually get it to your local Walmart is going to increase. And that's why there are 2 consequences out of everything that is happening out there. First of all, a lot of oil companies will see their profits soar if something like that is going to happen, such as ExxonMobil, BP, Shell, Chevron, and other companies. Of course, there are far more companies out there when it comes to oil than just these 3 companies or a few companies that I have listed over here. But nonetheless, it's not just about oil prices. You have to understand that when it comes to those companies, they must have proper balance sheets, their valuation should be fine, and they should reflect the prices that you see on the screen right in front of you. Because if those companies might be overvalued, and even though oil prices will rise, their stock prices are not going to increase. They might not be able to pay more dividends, for example. And that's why it's extremely important to do your analysis to know which of those oil companies will actually rise and which one of those will not rise at all. That's something you have to do. You have to be a good investor and a good analyzer in order to understand which one of those are actually going to increase. On the other side, if something like that will happen, of course, inflation might actually rise because that will increase the prices of everything in the market. So There are people on the other side who are going to make billions of dollars out of it, but when it comes to the general population, to the average people, to the middle class, to the poor people, they will actually suffer because they don't often take advantage out of the stock market. They don't often take advantage out of the markets that are happening out there. Usually it all means for them that prices will rise for them and they will just spend a bigger chunk of their income on the basic necessities. While people on the other side, on Wall Street, people who know how the markets work, they will probably make a lot of money out of it. Thanks for watching, and I will see you in the next one.